Good morning, traders. My name is Alejandro Zambrano, Chief Market Strategist with ATFX in London. Let's take a look at stock markets. We're seeing the DAX up by a good amount as well. The S&P 500 is not far away from reaching a new 2018 high. Finally, we're going to take a look at the Russell 2000. There's something really interesting there that you really want to pay attention to over the next few days and weeks. Okay, so let's begin, and we'll begin by taking a look at the German DAX, which actually continues to trade to the upside. So this is a head and shoulders patterns that I identified and mentioned in the ATFX morning brief that we host at 9:30 a.m. London time on YouTube. And we talked about the German DAX being in a major head and shoulders pattern, with the October low being the left shoulder, the March low here, or March 22nd low being the right shoulder, and the head being here in January 2019. And the market traded to the upside. And at the time we said, one could buy at that close with a stop loss below that candle low and target the level here from September 2018. That would provide a risk reward ratio about 4.89 times the risk, which is a really good one. However, though, the head and shoulders pattern itself is suggesting we can go up to 13,100. Now, what's causing this to go to the upside? Well, firstly, the U.S. economy is doing much better than projected. Remember, when NFPs printed 20K, everybody thought we're going to have a recession, as well with the inverted yield curve as well. People talking a lot about recession. But also, I think something that's not very much talked about is the fact that they're starting to get some really good news about the U.S.-China trade deal, which I mentioned before. And imagine that for American companies being possible to do business in the U.S. without technology transfers. That means that products today that are being produced, for example, in the U.S., could be produced now in China, potentially at much better rates for example, companies. And I think this is translating, like if the U.S. is able to create some good deal with China, then potentially Europeans are going to push for the same. So it could potentially cost, again, a lot of the products that are being bought and produced by companies like in the German 30 and as well in the S&P 500 to be much cheaper. And it makes perfect sense that corporations or values are moving up ahead of that deal potentially being implemented. Now, to trade this today, it's a little bit too late to buy the DAX, but we are going to talk about the Russell 2000, which I think is could potentially trade much higher. If you do indeed want to trade the DAX, though, I think you need a bit of a pullback, at least something like 11,992, if not a little bit lower. And for now, I'm going to remain bullish as long as I trade about 11,824. Now, let's talk about the good stuff. This is the Russell 2000. Russell 2000 is a small cap index in the US, the 2,000 of them to be exact. And the market here has been lagging, and it's not moving ahead as blue chip companies like the S&P 500, which makes perfect sense because people are worried. And in times of the markets being under stress, people will buy big corporations that they know. They don't really want to invest in small companies that are not necessarily making profits. Now, what's happening here in the Russell 2000 is that you have, again, a massive head and shoulders, much like the one we have in the DAX, and it's suggesting that the price could gain by almost 21%. Now, let's be reasonable and let's assume that we're not going to go there in one go. Rather, we're just going to head to the 2018 high, much like the other stock indices. Well, then it's still a very good, interesting situation here. And if we assume that a break to the 1598 level, which is the high here from March 4th, if we break that level, stop goes below today's low, and we reach that target, then you're still looking at a 7.73 times risk reward ratio on this trade idea. So it's not a bad market at all. In fact, it's a really good one. It could potentially develop into something interesting, given that we have a close above that March high, and we indeed never really go back and touch the low of the day. So from that perspective, it's looking like a really, really good risk reward ratio trade. As for the S&P 500, in the morning webinars, we did talk about the inverse head and shoulders, a small one on the 1 hour. And we had the break here on April 12th. The market just reached its target. I would not get involved up here. I think we do need a bit of a pullback as a minimum back to the breakout point at 28.96. But I think as long as you trade above, let's actually delete this now. As long as you trade above something like this level here, which is the April 9th low, I do think the trend will continue to be bullish, and I think pullbacks will be bought. And of course, eventually there will be some sort of a strong pullback, and we will just need to judge and see what happens at the time. But for now, all these markets are bullish. Something as well I would be paying very close attention to is how the market reacts when and if we take out that 2018 high. If you read on places like Bloomberg or CNBC TV, and also on Twitter, if everybody's sort of suspicious to that new high, and then that would be actually a good sign that we could potentially continue to trade upwards. However, though, people are saying like, oh, well, yes, I told you it was going to go upwards, and it's time to invest more money here because we think it's going to go much, much, much higher. If we have that optimism, especially in mainstream media, then that could be a sign really that we might have seen a short-term high, or as people book profits. Otherwise, if people are seeing at these highs with skepticism, which they are right now, if you look at places like Twitter, then that could be a good sign, because that means that they could potentially see higher prices as people get fully aware of that being long stock market is really the name of the game in 2019. Thanks so much for watching, and don't forget to subscribe to these videos on YouTube for notifications and emails when we have uploaded a new one. Thank you.